All right, let's get right into a story about incredible foresight, just terrible timing, and what might be one of the biggest regrets in modern investing. We are talking about Michael Burry. Yeah, the guy from The Big Short, and his absolutely wild ride with a little video game store called GameStop. This is really the heart of the whole thing. It is a wild thing to hear from a man who is famous for seeing the future when nobody else can. So how on earth did the investor who called the 2008 financial crisis completely miss the single biggest stock mania of a generation? Let's break it down.
You have to remember, before GameStop was GameStop, before all the memes and the headlines, it was just another struggling retail store that Wall Street had basically left for dead. But Michael Burry, he looked at this forgotten company, and he saw something special.
So, just to set the stage here, Michael Burry is a legend. His claim to fame is betting against the U.S. housing market and making an absolute fortune from the 2008 crash. So you can imagine, when this guy makes a move, people pay very, very close attention.
And this is way back in 2018, years before the frenzy even began. Burry's deep dive analysis led him straight to GameStop. And while pretty much everyone else saw a dying brick-and-mortar store in a digital world, he saw what investors call a classic value play, a company that was way, way undervalued.
So what did he actually see? This wasn't just some random hunch. Burry had a really clear, data-driven argument for why GameStop was worth a whole lot more than its stock price suggested. Let's dig into his reasoning.
Okay, what's so cool about this is just how logical it all is. Burry saw four big things that could make the stock pop. First, he knew the new PlayStation and Xbox consoles were coming in 2020, and that always brings people into the stores. He saw that maybe someone would buy the company, that they could sell off their cell phone business for some quick cash. And, this is the big one, the company was making enough money to buy back a ton of its own stock, which would push the price up. And this quote is just perfect, because it shows the battle going on in his head. You know, the numbers on his computer screen were telling him one thing, but the reality he saw with his own eyes, well, it was grim. He actually went to a store and said it was a mess, that even the new stuff looked like it was on a clearance rack. The data was great, but the business itself looked awful.
But even with those doubts, the numbers were just too good to ignore. After selling his first small stake, he jumped back in, as he put it, with both hands, in the middle of 2019. And this time, he had a new secret ingredient. He saw that a massive number of big-shot investors were betting against the stock. This is called high short interest. And for Burry, it was like a coiled spring just waiting to be released.
So let's recap. He's got the right company, he's got the right thesis, and he's in years before anyone else. So what went wrong? Well, this is where the story takes a painful turn. He got off the rocket ship just moments before it took off for the moon.
I mean, this timeline is just brutal to look at. Just look at these dates. He holds on for 16 long months, fighting with the company to make changes. Then, in November of 2020, he sells everything. And then, just a few weeks later in January 2021, the stock goes completely vertical in one of the craziest short squeezes in history. Now, to be fair, he didn't lose money. Not at all. He bought his shares for about 83 cents on average and sold them for around $3.38. That's a 4x return. By any normal standard, that's a massive win. But, as we're about to see, what he left on the table was nothing short of legendary.
Because what happened next was something no financial model, no spreadsheet, no genius investor could have possibly predicted. This wasn't about profits or business plans. It was driven by memes, by Reddit, and by pure, uncut market mania. All right, burn this number into your brain. $3.38. This is Michael Burry's average selling price. A great profit. He's out. Game over.
And then, just 50 days later, this. The stock price hit an intraday high of over $120 a share. The difference is it's staggering. It's almost hard to wrap your head around the kind of move he missed.
Burry actually did the math himself. His initial investment of around $12 million could have, at its absolute peak, turned into $1 billion. $1 billion. Now, he's quick to say he never would have held on that long, but it just shows you the insane scale of what was at stake.
So yeah, the billion-dollar question is, why? Why did one of the smartest investors on the planet sell at that exact moment? Well, he actually broke it down himself into 3 key reasons.
Reason number 1 was pretty simple. At the end of the day, he just thought GameStop was, in his words, a crappy business. He saw that all the changes he fought for, the buybacks, the new board members, weren't doing anything to the stock price.
He basically lost faith that the management team could actually turn things around.
Reason 2, and this is a big one. He completely missed the human element. He had absolutely no idea that a regular guy, an investor named Keith Gill, who you probably know as Roaring Kitty online, would become this charismatic leader for a movement of millions of everyday people buying and holding the stock. That was a variable that just wasn't in any of his models.
And finally, the most technical reason. He just didn't see the mechanics of the market playing out this way. He never imagined that thousands of retail traders, all working together online, could pull off something called a gamma squeeze. Simply put, it's a massive buying frenzy that feeds on itself, creating an unstoppable loop. It was a totally new and totally legal way to corner the market.
So, after the dust settled, Burry had some time to reflect on this whole insane episode, an event that really he helped kick off, but ended up watching from the cheap seats. And his feelings, as you can imagine, were pretty complicated. He said watching it all happen was a real mix of emotions. On one hand, it was spectacular. It was hilarious in its absurdity, but it was also tragic, because he knew that a lot of small-time investors who jumped in at the top were going to get crushed when it all came crashing down.
And that last part, the tragic part, connects right back to who he is, right? The guy from The Big Short. He actually started tweeting, warning people that they were going to get shredded. He felt that same need to sound the alarm that he felt before the 2008 crash, seeing a disaster about to happen to everyday people.
So that brings us to today. After all the chaos, all the headlines, what even is GameStop now? The mania's over, the stock is back on planet Earth. What does the man who started it all think of the company now?
And his final take is just classic Burry. He sees the company in pretty much the same way he did back in 2018, as a melting ice cube, a business that is slowly fading away. The only difference? Thanks to the mania, all the numbers, from the cash in the bank to its valuation, are just 10 times bigger. A fascinating and very strange puzzle left behind for a whole new generation of investors.